Hi everyone. Today we are going to cover the chapter planning and supervision in audit. Planning is the primarily the first part when we start the audit. There are certain various steps in the planning, such as firstly we understand the assignment, accept the engagement. After that we plan the audit and initiate the initial assessment in the risk assessment of the part of the planning. After doing the risk assessment, we perform the internal control and we also access the control risk. After that, we respond to the risk identified, risk assessed, and we accumulate the audit evidence, which we also call substantive testing. After that, we evaluate the audit evidence, and if that is sufficient and appropriate, we prepare the audit report. This is the entire audit procedure that we perform. To begin with, we are going to cover engagement, understanding, and acceptance, which is the first part of our audit. In this video, in this lecture, we will cover the engagement, understanding, and acceptance. What are the pre-engagement acceptance activities? Pre-engagement acceptance activities includes to receive an appointment, check the client acceptance and continuance, check if client is auditable and ethical, check with previous auditor, accept the engagement, that is prepare the engagement letter. Firstly we receive the appointment from the client. We both have the meeting and we receive the appointment to have the meeting to perform the audit procedure to understand the business. After that we check the both of us, both parties responsibility is to check each other that we are eligible to perform audit for the client and client is eligible to perform mm, take us as auditor or not. After we check the clients, that is auditable and ethical, we check the background, their past records, and everything that they are ethical, and we can proceed to audit or not. After that, we check with the previous auditor, like we reach out to the previous auditor and we check the details, we check the financials, we understand the business, we understand that if there is any fraud or any risk, specific risk associated with the firm that we are auditing or not. And after that, all the process we accept the engagement letter, the terms and conditions mentioned in the engagement letter. We accept the letter and we accept the engagement letter at that process. Now I will discuss all these five steps in details. While appointing auditor, auditor is appointed by the audit committee or those charged with governance. If the company is listed to US exchange, then SOX requirements are fulfilled and the audit committee appoints and oversees the auditor and also pre-approves all the services to be provided by the auditor, like they read out all the terms and conditions and what services can the auditor provide and what services they are prohibited to provide. After that they check the timing of the appointment, like early appointment, late appointment, reasons for the late appointment. Though early appointment is always preferred, but if there is certain cases in the company, in that cases the late appointment is also considered. Okay, but the late appointment is okay only if it doesn't poses any limitations on the audit that may lead to the qualified opinion or disclaimer of opinion. Any concerns should be discussed by the client in detail. After that, we determine the nature and scope of the engagement. What questions should come in the mind while determining the nature and scope? Is it integrated audit? Are we providing tax services along with the audit? It is a single period audit or multiple periods audit? Is it government audit or the funds receiving the fund from government? It is for, if it is for non-issuers, we consider if review or compilation is more appropriate than audit. These are the questions which we think of, which we identify while determining the nature and scope of the engagement. After that comes the auditor's client acceptance and continuance policies. Here, whether the engagement team is competent to perform the audit engagement and has necessary capabilities including time and resources. Here, ability to meet the reporting deadlines is considered. depending on the complexity of the engagement, also the availability of the staff in the engagement, like how many personals are required to conduct the audit, whether the firm and the engagement team can comply with the relevant ethical requirements, if if they are currently independent and they will be able to maintain the independence or not throughout the audit and all the process, if they are able to comply or not. After that, we identify assess the client's auditability, like whether the financial reporting framework is acceptable, whether accounting records will be available and adequate. In the accounting records, we access the relevant information that will be available. Will management provide any additional information or need, or will auditor have unrestricted access to the persons within the entity to provide the audit evidence? After that, we check the integrity of the client. Here auditor may not be okay if auditor should not be okay if the client lacks the integrity. For example, does the client follow the ethical business practices? Is the client involved in any money laundering or any other criminal activities or not? So this is the prima facie duty of the auditor to identify all these background. After that, we will also check the attitude of the management, like does the management acknowledge and understands the responsibility? For example, are they aware of the fair presentation of the financial statement? Is the design, implementation and maintenance are adequate for the internal control or not? So these are the process that auditor keeps in mind while accepting the engagement. So after that, what we do is we communicate with the previous auditor. We reach out to the previous auditor and we communicate with them. What are the things that we communicate with them? So it's the responsibility of the current auditor. So it is the mandatory thing to before accepting any engagement for the initial audit, including if we are re-auditing the engagement. Auditor may make the engagement proposal before making inquiries of predecessor auditor, but needs to advise the management that auditor's acceptance of the engagement cannot be final until inquiries have been made and responses of predecessor has been evaluated. Also, management permission is needed. Auditor should request management to authorize the predecessor auditor to respond fully to auditor's inquiries regarding matters that will assist to the auditor in determining whether to accept the engagement or not. If management refuses, auditor may consider refusing the engagement. Auditor should evaluate the predecessor response or consider the implications if the predecessor provides no or limited response in determining whether to accept the engagement. So here, in accordance with the CPA code, the predecessor auditor is expected to cooperate and respond to the auditor's inquiries promptly and fully. If the predecessor does not respond to the fully due to unusual circumstances, predecessor is expected to clearly state the response is limited. And before the acceptance, we also need to understand the reason for the change, integrity of the management, disagreements during the audit, communication of the predecessor of the audit committee, and understanding the predecessor audit. So this was the mnemonic for all the things that we have discussed. Like what is the reason for the change of the auditor? We will check the integrity of the management. We will check the disagreements made during the audit. We will communicate with the predecessor auditor, and if there are any limitations, we will understand what are the limitations of from the predecessor auditor. These were the things before accepting the engagement. Once we accept the engagement, what we do? So after the engagement has been accepted, we will we will perform inquiries regarding the specific matters, like predecessor knowledge of existing relationship and extent of the management involved in material transactions. Extent of response to inquiries is as predecessor professional judgment. We will review the predecessor's audit documentation. Many may provide evidence regarding opening balance, consistency of accounting principles. Also, extent of access provided is as per predecessor's professional judgment, and predecessor is not responsible if info is not sufficient or appropriate. Ordinarily, predecessor permits review of audit documentation relating to the planning, audit procedures, audit results, and other matters of continuing or counting auditing significance. Discovery of possible material misstatement in the financial statement reported by the predecessor auditor. So here we will request the management to inform predecessor of the situation and arrange for the three parties to discuss this information and attempt to resolve the matter. If the management refuses or auditor is unsatisfied with the resolution, he or she may consider to withdraw from the engagement. They are not in the binding to perform the engagement. Also, now the preparation of the engagement letter. It is mandatory to have the written engagement letter, and both the parties should clearly understand the matters written in the engagement letter. Like auditor and client both should understand the matters written in the engagement letter. So it is mandatory to have the written engagement letter. No verbal, no oral engagement letter is accepted, but the written one is the mandatory. Auditor should agree upon the terms and conditions of the engagement with the management or those charged with governance. Generally takes the form of engagement letter which should be accepted, signed and dated by client. Helps avoid misunderstanding with respect to the audit, like reduces the risk that management may inappropriately rely on the auditor to protect the management against certain risks or perform certain functions that are management's responsibility. The agreed upon procedures, written terms of the audit engagement should include the following: objective and scope of the audit of the financial statement, like what are the management responsibility, like preparation of and presentation of the preparation and the fair presentation of the financial statement, design, implementation and maintenance of internal controls for financial reporting, provide auditor with access to all the relevant info. Any additional info is requested and to persons within the entity as auditor determines necessary. Provide written representation to the later auditor. What are the auditor's responsibility? It is also written in the management engagement letter. So auditor's responsibility is to conduct audit in accordance with the generally accepted accounting standards to obtain reasonable assurance about whether financial statements are free from material statement or not. Communicate any significant deficiency and material weaknesses in internal control that come to the auditor's attention during the audit, but no assurance on the internal control unless it is integrated audit. Only in the integrated audit assurance is given. What are the limitations of the audit? It should also be mentioned in the engagement letter. So limitations are statements that because of the inherent limitations of audit together with the inherent limitations of the internal control and unavoidable risk exist in the some material misstatement may not be detected even though audit is properly planned and performed in according gas. So there is always an inherent limitations in the audit they that we give the reasonable assurance, not the accurate assurance. We are not giving the accurate answers, but we are giving the uh, financial statements are the free from material misstatement. The word free from material misstatement is important, and we give the reasonable assurance here. So that is the limitations of the audit. We mentioned the identification of the applicable reporting framework, like which gap we are performing, Indian gap, US gap, or any country specific gap that we are performing. That is also mentioned. Reference to the expected form and content of auditor's report. A statement that circumstances may arise in which report may differ from its expected form and content. It may also include a description of types of the report to be issued. Other matters are optional, but it is not mandatory. Other matters may include basis on which fees are computed and any billing arrangements concerning involving involvement of other auditors and specialists in audit, arrangements concerning involvement of internal auditors and other staffs of the entity, arrangements to be made with predecessor auditor in case if any initial audit, any obligations of the auditor to provide audit documentation to the parties, additional service to be provided such as relating to the regulatory requirements. If understanding is not achieved, the auditor should withdraw. Like if this is not mutually understood, then auditor should plan to withdraw the engagement and not accept the audit. After that, what is the role of the audit committee here? We will discuss in the next video like role of audit committee in the appointment of the auditors, in the acceptance of the engagement letter, everything we will discuss in the next video. Thank you. I hope you all had gained proper insights from this video. Let me know if you have any queries. Thank you and bye.